Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, as usual let's take a look at the bull market in the second daily video. So yesterday our trade has started rather well. Market indeed has shown the drop, and this drop has accelerated close to the end of the session when the United States market has opened. So right now on the daily chart, actually we do not have any new inputs. We expected market will drop to the 618 support. At least this is suggested by the patterns that we have here. In particular, speaking, the bread and butter sell. It's approximately around 1233 area. So that's the destination point that theoretically should be reached. And right now we still will be focused on this predefined target. And on the daily chart right now we don't have any new inputs. Maybe a couple of words we could say on about a stretch pattern. Because we also have got the stretch, and that was another pattern that has become the background for the trading. The tricky moment with the stretch pattern stands around its target, because actually this is dynamic parameter and it depends on the level of the upper bottom and oversold. Usually it's suggested that stretch is done when market price reaches the level when it's neither overbought nor oversold. So when the, shortly speaking, in the middle between the bands. This is the area where the trended oscillator we also have in our pack of indicators, but it's usually drawn in the bottom of them, and the single line at the bottom of the screen. So I could even show you just a minute. It's important because when you will trade the stretch pattern in the future, you should know this issue. So here's the trended oscillator. Right now it stands very close to zero. It means that the stretch pattern mostly done. And indeed, if you will calculate the distance between the bands, it's approximately 12 squares. So the 2, 4, 6 squares stands particularly in this area. Slightly lower, so this just few cents down to the downside. It means that mostly the stretch pattern is done, and if you previously would like to trade the stretch, right now you can't do this because market has no potential to follow in the direction that shows by the stretch pattern. So that's important. This is dynamic parameter. That's why when you see the stretch pattern, it doesn't necessarily mean that the target should be complete when the market will starts moving in a direction. It could stand flat, but the level of overbought result starts to change. And it could happen that price stands the same, but stretch pattern is already done. This sometimes happens as well. That's why when you're dealing with the stretch, you should be extra careful. So right now we're mostly watching for a bread and butter trade target. If you'll take a look at the follow time frame, it should stand right here, 1233. It's major 618 support, and it's very interesting. Here market is forming something of the double top. If you will calculate the extension of the double tops, A, B, C top, it's 1618 coincides precisely with the 618 support, creates an agreement support. That's also, guys, will be, as you can see, weekly pivot support one. So currently we will be watching for this target. At the same time, as you can see right below the neckline of the double top pattern, we have another strong support area. And this support includes AB equals CD target. It also creates an agreement with the 1245 area. And slightly lower, we have monthly pivot support one. This is very important information because, guys, yesterday in our Trade Live with Sive video, we showed how we use stop entry orders to take the position. And here we should warn you to not do this, because sometimes traders place stop entry orders when it's right below the necklines of important patterns, just to get the position right on the breakout. This is good practice, but in a specific moments Here, this is not the one, because right below the neckline, you will get strong support and you have the significant risk to be trapped in the wrong direction if you will use stop entry order here. This is one of the features the Jed Napoli practice to find such areas and to be warned in advance that this could happen. That's why if you have taken the short position as we have discussed yesterday, right now you need to manage it. So think about the taking maybe half of the profit in this area and move your stop to the break-even on the rest position to possess yourself to the next downward action. So you should do something here, because here you could get some significant retracement. Most common practice is grab the profit on half of your position and put the stop to the break-even on the rest one. This is most common practice, what usually traders do in such circumstances. So on the hourly chart, guys, here you can see how our trade has started. Actually, it was perfect hand and shoulder pattern on the 15-minute chart. So markets right now is approaching to the neckline, and today we'll be watching for a breakout of this area. That will be important. So maybe some chance to take more extent to apply the scaling will be when the market will reach this support and show some meaningful retracement here. Maybe this will be a chance, but currently it's very difficult to say what reaction of the market will be at this support. But definitely these lows will not survive. So stops will be grabbed that stands below it, because take a look at the ABCD target stands below the lows. It means that market should drop lower. But here at the same time we have strong support. So very probable that here we could get some wash and rinse of these lows and some meaningful upward reaction. That's what we'll be watching for in today's video. In today's session.